Over 10 years ago in 2015, a young couple decided to move into an apartment in London. The apartment had no furniture and no decorations, so they started decorating it to make it feel like their own. Once they had all the sofas, the TV, and all the kitchen set up, they decided to get some art on some paintings in order to decorate it even further. So they walked into a small local art gallery and fell in love with a painting. At the time, the painting was worth over $4,000. But despite being a hefty investment, they decided to purchase it because they fell in love with it. This was actually painted by a then unknown Ghanaian artist called Amwaka Boafo. And this was really just a normal painting. They were just renting an apartment and they saw this painting and it made them feel at home. But then if you fast forward only a few years, Boafo's work started to get more exposure and all the prices of his art paintings just decided to explode. His portraits are now selling for $800,000, $1 million, and some even more. So suddenly that $4,000 painting that this couple had hanging in their living room, well, it was appraised at over $600,000 in 2021. So this is what the investment in this art painting actually looks like. Now the chart is not real because we only have two price points, the $4,000 and the $600,000, but this is just for you to get an idea. They went from over $4,000 to over $600,000 in just 6 years without actually even considering this an investment. That is close to a 100% CAGR. Remember that the S&P 500 has an average CAGR of 10%, and those are some of the world's leading companies. This art by Boafo clearly outperformed. But does this isolated example mean that we can all become multimillionaires just by buying and selling artwork a couple of years later? Well, chances are that that's not right. But today we actually wanted to find out whether art deserves a place in your long-term investment portfolio. And before that, we have to define what exactly classifies as art. Well, art actually refers to buying artwork, which can be anything from paintings, prints, sculptures, or even digital art. And in order to classify as investing, the objective of this doesn't have to only be enjoying it visually, but it has to be the idea that its value could actually grow over time, which in Boafo's example is exactly what happened. Now, art is what I would consider an alternative investment, because in general, a person knows very little about it, and the factors that influence the price aren't really straightforward. For example, the artist's reputation is the leading factor, where a well-known artist with critical acclaim or international exhibitions will obviously command higher prices. But then there are other factors such as their rarity and scarcity, such as limited editions. Next is the condition and authenticity of these artworks. If you have a painting which is extremely well preserved and has verified authenticity, such as certificates, expert validation, or some of this sort, well, that will be a lot more valuable than just a painting which is damaged or that nobody actually knows where it came from. And of course, another factor that can actually move the needle on the price is the market demand and the trends that are going around. If an artist or a specific style actually becomes trendy, well, the demand will skyrocket and the prices will too. But then I believe that there is a sort of taboo when it comes to art, because it is generally only reserved for the multimillionaires, right? Well, that's not true, and in the future slides we will actually show you why. But right now I believe that a very large portion of the population is actually investing in art, from retail investors to institutional investors, some of very acclaimed international funds which are specialized in buying art, then companies which allow you to purchase and invest in art, such as Masterworks or Yule Street, we will comment on them a bit later, and then also governments. Countries such as the UK, France, or even Spain have very large amounts of cash to actually buying and preserving special art pieces. And this, if I had to classify it in the terms of return, risk, and time frame, I would say that artwork is something that you can serve for a very long time frame. It's not something you can day trade off, but I think that the return and the risk, I could say it's just around average. If we were to compare the performance of these two asset classes, stocks on the one hand and art on the other hand, for stocks we could use the S&P 500 as a proxy, as it is pretty much the holy grail of investing in stocks, and then for art we could choose the Art Price 100, which is a private index, and by private I mean that it's only available on Yule Street or Masterworks, I believe, that actually tracks the price of the 100 most valuable or most recognized art pieces in the world. And the funny thing here is that despite the S&P 500 having a very good return over these 5 years of close to 100%, well, the art price 100 has actually outperformed by returning a 105%. And this is even after acknowledging that there is no publicly traded ETF that directly tracks the fine art market, mainly because art is illiquid, it's not fungible, and it's difficult to price in real time. But if we were to zoom out and go to the 16-year return, well, we can see that the art price has now outperformed the S&P 500 even further. Where the S&P 500 has returned 600%, the art price has returned over 730%. And just a quote by CAIA is that by understanding how art can be used as a strategic asset within a portfolio, well, investors can improve both in absolute and risk-adjusted returns and just protect against downside losses because it's a very good hedge against inflation. And this over here was something that I did not expect, where if we compare the total returns by strategy of the Masterworks blue chip art, well, this has obviously a higher return and CAGR than the S&P 500. However, when we take a look at the volatility, it does seem like this art index is a lot more volatile than stocks. And to me, since it's not a publicly traded ETF, and since it's something as illiquid as art, I would expect the volatility to be a lot lower. However, the number speaks for themselves. Total volatility for art we could say is 25% standard deviation, whereas for the S&P 500 is only 15%. Now, when we're analyzing alternative investments, we usually have a very similar story because, yes, you can invest in art in hundreds of different ways. However, all of these ways will determine specifically what kind of return and what kind of risk you're actually undertaking, because it's not the same to invest in an ETF than to just go by yourself and buy art pieces randomly. So over a 5-year CAGR, we actually have over here some performance of different investment vehicles that are all related to art. For example, on the high end, we have art investment funds, such as the indices that we have been looking at, which have returned a 15% CAGR in the past 5 years, which allows you to invest in specific indices and fractional investing into specific artwork. This has returned a 13% over the past 5 years. And then you have other fractional platforms, which have returned an average of a 10% CAGR over the past 5 years. Then you also just have to consider the average investor walking into local art galleries and purchasing art. Well, this through direct ownership has returned around an 8%, and this is just a very general proxy. And on the far right side is of course something that we have forgotten about since 2022, but this is NFTs and any piece and any general form of digital art. You can have extremely negative investments with NFTs, or you can have over 1000% returns. It varies so much that we decided to just not put a value on it. And now remember when I told you that a lot of people have this belief that art is only for the ultra wealthy? Well, not anymore, thanks to asset tokenization. What this basically means is that you're now able to own percentages of artwork. And how this works is that you take, for example, a painting, you place this painting into a holding entity like an LLC, and you create tokens of it. Then you launch these tokens and you make them public so that people are actually able to buy them. And at the end, owners of these tokens receive all the benefits, all the income, and all the capital gains which are based on the ownership. Now, there are many fractional art investing platforms. The biggest ones that I've seen are Masterworks, Yield Street, Artimundi, Artstead, and Athena. I was very curious of what has actually led for art to become such a generalized piece of investing. So I have a timeline of market developments for how this all started. Well, in 1974, we actually had one of the first institutional art investments valued at £40 million to just buy a lot of artworks, put them in exhibitions, and just monetize these pieces of art. Well, if you fast forward a lot and you reach 2001, you have the launch of the Fine Art Fund, which is the first professionally managed art fund. In 2019, then you have the launch of Masterworks, which was the first fractional art investment platform, and this actually allowed for mass market adoption for art as an investment. Then in 2020, you have a wave of anti-money laundering regulations in the UK and European markets, and this was used to regulate a lot of dirty money flowing in through the economy through art purchases. Now you have over 5 million members on fractional art investing platforms, which is just a show of how attractive this is becoming for regular day-to-day investors. And as with every single alternative investment we've analyzed, you have the good things and the bad things. So for this, we can analyze the successful headlines such as private equity firms turn to art for portfolio diversification, contemporary art delivers over 14% annual returns over a decade, art market reaches over $67 billion in global sales, and the art market proves resilient amid economic uncertainty. And on the other hand, we have setback headlines such as art market correction as big spenders faded in 2024, auction sales actually fell 27% in 2024, worse than the pandemic year, global art sales declined for the second straight year, and liquidity and transparency are still major challenges in art funds. Now, who do I believe that this investment is right for? Because I believe that art actually has the potential for medium return, a medium to high risk level, especially if you don't know what you're doing, and a medium to very long time frame, with a max drawdown that can be medium to low, and the fact that this does not generate income. So I would say that this is for investors looking for a wider portfolio diversification and with a very long-term focus. However, I believe that art is an interesting asset class as it can allow you to hedge against inflation, to diversify as this basically has zero return correlation with any other investment out there, and then you gain exposure to just global demand increase as wealth expands into emerging markets who are now buying and accumulating more of that global artwork. And I would say that for a potential investor, some of the most important characteristics would be a very long-term mindset, the risk tolerance and acceptance towards having a very illiquid asset, which you cannot just sell from one day to another, and for them to have extensive market knowledge. Now, I spent a lot of time thinking about art and if it has a place in my portfolio, and I believe that in a world like the one we're in today with rising debt, sticky inflation, owning scarce valuable assets such as art could actually be a smart move, especially because it has historically been resilient and it does not rely on the financial system to retain its value at all. Like art, even throughout wars, has been a special form of currency. So thank you for watching. As always, this has been the Cashflow Compounder. Join the free Patreon for extra content, and I will see you in the next one.